India's fame as international's quickest developing foremost economic system to be brief-lived. Reuters poll Bengaluru, India probably recorded strong double-digit economic growth in the closing quarter. However, economists polled by predicted the tempo to extra than have this zone and sluggish further towards the end of the year as interest charges rise. Asia's third-largest economy is grappling with consistently excessive unemployment and inflation, which has been running above the top of the Reserve Bank of India's tolerance band all 12 months and is ready to achieve this for the rest of 2022. Growth this quarter is expected to graduate sharply to an annual 6.2% from an average forecast of 15.2% in Q2, supported specifically by way of statistical comparisons with a 12 months in the past in place of new momentum, before decelerating further to 4.5% in October-December. The median expectation for 2022 increase was 7.2%, in step with an August 22-26 poll, but economists mentioned that the stable growth charge masks how swiftly the economic system turned into anticipated to gradual in coming months. Even as India stays the fastest-growing primary financial system, domestic intake will possibly no longer be robust sufficient to force boom. Similarly, as unemployment remains excessive and real wages are at a report low level, stated Kunal Kundu, India economist at Société Générale (OTC), SCGLY. By assisting growth via funding, the government has only fired on one engine at the same time as forgetting about the impetus which domestic consumption affords. This is why India's increase continues to be under its pre-pandemic fashion. The economic system has now not grown speedy enough to house a few 12 million people becoming a member of the labor force each year. Meanwhile, the RBI, a relative laggard within the global tightening cycle, is set to raise its key repo fee through some other 60 basis points by using the stop of March to try to bring inflation inside the tolerance limit. ECILT, in that follows 3 hobby charge rises this year totaling 140 basis factors, and might take the repo price to 6.00% by using end Q1 2023. While the primary financial institutions' mandated target band as 2%-6%, inflation become expected to common 6.9% and 6.2% this zone and next, respectively, before falling just beneath the top give up of the variety to 5.8% in Q1 2023. That is kind of in line with the valuable financial institutions' projection. Despite symptoms of a cool-off in rate pressures, it's miles premature to go clean at the inflation fight given widespread uncertainties from geopolitical risks and tough landing risks in fundamental economies, stated Radhika Rao, senior economist at DBS. The financial system is likewise enduring inflation strain from a vulnerable rupee, which for months has been buying and selling near 80 to the US dollar, a stage the primary bank has been protecting in currency markets with the aid of selling dollar reserves. The modern poll also confirmed India's modern account deficit swelling to 3.1% of gross domestic product this year, the best in at the least a decade, which may additionally put in addition stress at the forex. For other stories from the worldwide long-term financial outlook polls package smiley face.